All right, let's tackle a huge question, one that could fundamentally change the global economy. Is the US dollar's long reign finally coming to an end? We're going to cut through all the noise and just look at the data. So, you've probably heard the term de-dollarization buzzing around a lot lately. It's gone from this kind of fringe economic idea to a totally mainstream debate. But before we can even ask if it's really happening, we have to get a handle on just how massive the dollar's influence is right now. Let's start with a really big number. 54%. That's how much of all global trade is invoiced in US dollars. And what's just wild about this is that the US itself, it only accounts for about 10% of that trade. The dollar is, for all intents and purposes, the default language of global commerce. Now, look at this number, $7.72 trillion. That's how much central banks around the world hold in US dollar assets. And this isn't just cash sitting in a vault. It's basically the world's financial shock absorber. When a country's economy gets into trouble, they use these dollar reserves to keep things stable. And here's one more key piece of the puzzle, 80%. That is the slice of all globally traded oil that's priced in dollars. You might have heard of the petrodollar system, and this is it. It creates this nonstop, built-in demand for dollars from pretty much any country that needs to buy energy. So here's our game plan for this explainer. We'll kick things off with why the dollar matters so much, then take a quick look at its history. From there, we'll dive into the signals that a shift might be underway. And, this is crucial, figure out if these are temporary changes or something more permanent. Then we'll check out the competition and finally explore what the future could realistically hold. Okay, so first things first, we have to understand that the dollar isn't just another currency. It's the core infrastructure. It's the plumbing. It's the very backbone of the entire global financial system. Its role is so huge, so fundamental that honestly, most of us just take it for granted. So what exactly is a reserve currency? Well, think of it like a country's emergency savings account. When their own currency hits a rough patch, they use these reserves, which are mostly US dollars, to stabilize their economy. For this to work, a reserve currency has to be stable, easy to get your hands on, and super simple to trade. The dollar pretty much nails all three. So these three pillars, they really get to the heart of the dollar's power. It's the currency for trade, it's the price tag on vital things like oil, and, critically, it's a tool of financial power. The ability to freeze another country's dollar assets, as we saw with Russia's reserves, is a pretty stark reminder that if you're holding dollars, you're playing in a system where the US sets some of the rules. Okay, but how did we even get here? How did the dollar become this dominant? It definitely wasn't an accident. It was a mix of deliberate design and, well, decades of evolution. It really starts back after World War II with the Bretton Woods Agreement, which basically made the dollar as good as gold. Then, in 1971, President Nixon cut that link, and everyone thought, this is it, the dollar's going to collapse. But the exact opposite happened. With no real alternative, its dominance actually grew stronger. It wasn't until the euro came along in 1999 that a serious competitor even appeared, but it never quite managed to dethrone the king. And that brings us to today. So let's really dig into the data that's got everyone talking about de-dollarization. Are we actually seeing a real, meaningful change here? Okay, so this is the headline number everyone points to. The dollar's share of global reserves has slipped down to about 56%. And yeah, that is definitely down from the 65, even 70% it used to be. So on the surface, that looks like some pretty clear evidence of a decline. But here's the twist. An IMF analysis dug into this and found that a whopping 92% of that drop wasn't because central banks were actively dumping their dollars. Nope. It was basically an accounting illusion caused by the dollar's own value fluctuating against other currencies. So it's less of an active rebellion and more of a passive drift. But this chart, this shows something that is absolutely a real change in behavior. Central banks are buying gold at a pace we haven't seen in modern history, doubling the recent average in 2024. They aren't necessarily replacing the dollar, but they are aggressively hedging. And why? Simple. Gold is the one asset that no foreign government can just freeze or sanction. It's the ultimate geopolitical insurance policy. Okay, so to really understand what's going on, we have to split things into two buckets. Temporary pressures versus permanent shifts. And trust me, this distinction is everything. On one hand, you've got what we call cyclical pressures. These are things like changing interest rates, short-term economic forecasts, or just general market mood swings. When US interest rates are lower, for instance, the dollar looks a little less attractive for a while. But here's the thing. These are temporary. They're like the weather. They come and go with the economic seasons. But on the other hand, you have the structural factors. These are the deep, long-term changes in the landscape. Think about the rise of new economic power blocks, or the precedent set by freezing Russia's reserves. These events permanently change how countries think about risk. These are the kind of deep shifts that don't just vanish when interest rates tick up or down. So think of it like this. Cyclical headwinds are like a passing storm. They can feel intense, but they eventually clear up. In fact, during a big storm, like a financial crisis, investors often rush into the safety of the dollar. Structural shifts, though, that's more like the climate itself is changing. It reflects a permanent alteration in the environment. And the big debate today is which of these two forces will ultimately win out. Which, of course, brings us to the million-dollar question. Well, the multi-trillion-dollar question, really. If the world is looking for an alternative to the dollar, what are the actual options? And as it turns out, finding a replacement is way, way harder than it sounds. All right, let's do a quick reality check on the competition. The euro? It's the clear number 2, but its big weakness is that there's no single government or single treasury bond behind it. The Chinese yuan? It's backed by a huge economy, but you can't freely move money in and out due to capital controls. And that's a total non-starter if you want to be the world's reserve currency. And gold? Well, it's safe, but it doesn't earn any interest, and you can't exactly use it to settle billions in trade every day. Each contender has a major fundamental flaw. And this brings us to the dollar's deepest, most powerful defense, its secret weapon, really. That's the $29 trillion U.S. Treasury market. It is the deepest, most liquid, and safest financial market in the history of the world. There is literally no other place on Earth where central banks can park trillions of dollars and know, with absolute certainty, they can get it back instantly without moving the market. All right, let's put all these pieces together. Where is this all headed? Instead of making one single prediction, let's look at 3 plausible scenarios for where the dollar could be in the next decade. The most likely path seems to be something called managed diversification, where the dollar slice of the pie just kind of slowly shrinks a bit, settling into a new normal around 50%. A more extreme possibility is multipolar fragmentation, where the world actually splits into rival financial blocks. And then there's the least likely but most dangerous scenario, an accelerated decline, probably sparked by some major crisis of confidence in the U.S. itself. And this quote really nails the whole situation. The erosion, this gradual chipping away at dollar dominance, that is very real. It's a structural trend. But the reality is, there's just no one else ready to step up and take the crown. And that, right there, leaves us with one last really critical thought. The biggest threat to the dollar might not come from the euro or the yuan or even from gold. It might come from within. The dollar's future ultimately rests on the world's continued faith in America's economic strength and its political stability. And so the real question we have to ask is that foundation as rock solid as everyone assumes it is?